Good morning, good afternoon, and good evening, everyone. Welcome to this Global Inclusive Green Finance Conference co-hosted by Banco de Moçambique and the Alliance for Financial Inclusion. We are delighted to have all of you with us here at the third Global Conference. I am Johanna Neumann, the head of Inclusive Green Finance at AFI, and I will be leading our deliberations today. So quite excited to kick off this third Inclusive Green Finance Conference. Since we started the AFI workstream now around 2 years ago, we have come a long way. This third Inclusive Green Finance Conference will be focusing on taking stock of the progress so far and to jointly discuss the path forward. This is very much meant to be a dialogue with some joint conclusions at the end. But this will also be a moment for us to launch a new conceptualization and framework of inclusive green finance and to celebrate the Maya Declaration commitments made under the Sharm el-Sheikh Accord on financial inclusion, climate change, and green finance. But to welcome us to this conference, we are delighted to have the governor of Banco de Moçambique, Governor Sandamela, with us here today. As the co-host of the conference, I welcome the governor to provide the welcome remarks.
Yes. Good morning to everyone. Good afternoon, good evening, all over the world. Governors and deputy governors of the AFI network. AFI Executive Director, Dr. Alfred Hani, AFI management and staff, members of the AFI network, distinguished guests, ladies and gentlemen. It is a great pleasure and honor to welcome you all to this important event on inclusive green finance. This year being held virtually due to the COVID-19 pandemic. In this challenging time, I hope you and your families are safe and coping with the increased pressure imposed by this pandemic as governments strive to mitigate the socio-economic impact. Please allow me to take this opportunity to thank the AFI Management Unit and all AFI staff for the helpful insights in shaping our policies and regulation to promote financial inclusion in Mozambique. Ladies and gentlemen, the COVID-19 pandemic increases our awareness on the urgent need to review and discuss our inclusive green finance policies aiming at supporting the most vulnerable population in building resilience and mitigating the adverse effects of climate change through financial inclusion. As we all know, climate change is a global phenomenon that requires a collective policy response. Therefore, in our effort to tackle climate change and move towards a low carbon economy, we have to ensure that we all play our role and no one is left behind. Ladies and gentlemen, as central banks and regulators, we are called to incorporate sustainability and resilience into our policy frameworks, addressing environmental, climate, and social factors. The implementation of a prudential policy, including development of stress testings for climate change, review of financial regulation, as well as adoption of financial education on inclusive green finance are critical policy solutions. Today's conference is a great opportunity for us to share examples on inclusive green finance policies and their implementation, as well as to identify the next steps toward a globally inclusive green finance policy development. In this conference, we will be launching the new Inclusive Green Finance Reflection Paper, co-written by the School of Oriental and African Studies of the University of London and the Alliance for Financial Inclusion. Moreover, we will share a short video depicting the Mayor Declaration commitments made by the AFI network under the Sharm el-Sheikh Accord on climate change and financial inclusion. Ladies and gentlemen, natural disasters caused by climate change are more frequent and severe, with economic and social implications, particularly to those at the bottom of the pyramid, thus increasing financial exclusion. Although Mozambique is in its initial stage on inclusive green finance, please allow me to share with you our most recent experience on climate change response, as well as other developments in this area. As you may recall, in March and April of 2019, the country was struck by two consecutive major cyclones, Idai and Kenneth, with significant negative impact on the local population, business, and core infrastructure. In addition to the overwhelming emergency assistance that we receive from the international community, local banks and microfinance institutions in the affected areas responded to the natural disaster by cyclones by extending loan maturity and providing longer grace periods. The country exposure to the natural phenomena impose mobility restrictions, thus reinforcing the importance of access to digital financial service, which were only possible through a strong collaboration among Banco de Moçambique as the financial regulator, banks and mobile money institutions, as well as government institutions and the private sector. The government has recently approved a new regulation on disaster risk reduction and assessment law, which envisages an integrated approach that addresses the management of natural phenomena to their full extent, from prevention, preparation, response, and recovery. Ladies and gentlemen, digital financial service through mobile money institutions have been the main drivers of financial inclusion in Mozambique. Recognizing the importance and the potential of digital financial service and fintechs in improving access and use of financial products and services in the country, in 2018, in particular in May, we introduced a regulatory sandbox for fintechs here at the Bank of Mozambique. The regulatory sandbox represents an opportunity to leverage financial innovation in a controlled environment for the development and testing of technology-based green finance solutions. Ladies and gentlemen, let's take this opportunity to learn from each other and drive inclusive green finance policies in our own countries, while we try to support our own national climate objectives and strengthen the stability of our financial system. We need to ensure that those at the base of the pyramid are at the core of all these policies that will be discussed and proposed today. As I get near the end of my opening remarks, I would like to thank AFI, Alliance for Financial Inclusion, for co-hosting this great conference with Banco de Moçambique and everyone involved in the organization of this conference, including my colleagues here at Banco that involve a tremendous amount of time, efforts, energy, and commitment. I look forward to hearing from your thoughts today and charting together the next steps on advancing inclusive green finance. Thank you all for your attention. Thank you very much.
Thank you very much, Governor. Thank you for highlighting the need to support the most vulnerable populations in our societies in building resilience and enabling mitigation, the adverse effects of climate change, and the role that financial inclusion can play in this, but also for shining a light on the importance of access to digital financial services, both in advancing inclusive green finance, but also in disaster risk reduction. Thank you very much. And for our second welcome remarks for today, they will be delivered by the AFI Executive Director, Dr. Alfred Hanig. Please, Dr. Hanig, the floor is yours.
Very much, Johanna, Governor Zanamela, senior officials from our AFI member institutions, dear partner speakers, and participants, of course, colleagues from Banco de Moçambique, who we just heard have worked very hard to make this event happen. The AFI team, ladies and gentlemen, also hello from my side to all over the world where you are seated. I can even see that we have our colleagues from Latin America with us. I saw in the chat, so this is very early morning for you. Welcome, but also welcome to our partners on the other side of the ocean where it is already very late. So good evening and good afternoon to you. It is more than a pleasure to welcome you all to this virtual global conference on inclusive green finance. And of course, it makes me very happy to see that so many of you are here. To all the regulators and policymakers from the network, our partners who are here, welcome. Now, of course, I would like to start off by saying that we express our sincere gratitude to Governor Zanamela and the Banco de Moçambique for accepting so graciously to co-host the event. We would naturally have liked and preferred to do it together with you in Maputo, a very nice city of Maputo, but these challenging times can only allow us to discuss virtually, unfortunately. These are not easy times for any of us, and to find inspiration and motivation under these circumstances be challenging for many of us. I think there is someone on mute. Johanna, can you make sure there is someone not on mute? I will just continue, but I have the sound here. Well, these are not easy times, as I said, and it is a challenging time, not only for us who we are professionals in this space, but also, of course, for those individuals, families, groups at the base of the economic pyramid. I think we all are aware that we have a joint responsibility to take action. Now, this year has passed very fast, and in times of virtual interactions, it seems that time is running out even faster. Our last annual gathering held in Rabat, Morocco, co-organized with Bank Al-Maghrib just a year ago, feels like being just a few moments away. However, a lot has happened since then, good things and challenging things. Let me congratulate everyone around the table for the achievements during this time. And of course, I would like also to thank everyone for driving the inclusive green finance agenda with such passion and energy since we met in Morocco last year. Governor Zanamela has rightly pointed out that mastering the challenges of climate change require global action. In these times of COVID-19, there is a constant discussion, as we can hear, around rebuilding our economies and how we should do that. And you are aware that we believe that the COVID-19 factor can be transformative for social and financial inclusion. This basic understanding that we share with many others connects nicely with the topic of our meeting here today, as we all agree that a green recovery can also cater to a more sustainable economy. However, and here I want also to put a cautioner, the image of a straightforward restart, as this current opportunity is oftentimes portrayed in the international space, could also lead us to overly simplistic conclusions. Why am I saying this? First, domestic and international political processes and decision-making mechanisms will remain complex, even after the pandemic. Second, we at AFI think that we do not have to start all over again, as we have learned so much over the past. The lessons that we have captured are very relevant, and we actually ask you to take this opportunity to leverage our valuable and solid learnings from the past to move our agenda forward in a practical and feasible way. Ultimately, we think that this will lead us into a better normal. Now, this conference is all about jointly discussing and finding a path forward on how to progress inclusive green finance policy nationally and globally. In the past years, since we as AFI Network have endorsed the Sharm el-Sheikh Accord on financial inclusion, climate change, and green finance, this policy area has been really taking shape, with the leadership coming from the members all over the world. With Sharm el-Sheikh Accord in alignment with Sustainable Development Goals, particularly Goal 1, no poverty, and Goal 13, climate action, we have launched the 4 Ps of inclusive green finance, the 4 pillars. The working group of inclusive green finance has been established, and the first in-country implementation projects have taken off. Today, we are taking a short stop from the practical work in this sense, because we will be presenting to you a policy framework, as the governor already mentioned, on IGF, developed together with Source and University of London, which is meant to provide a more in-depth conceptualization of this policy area. Based on this conceptual contribution, this conference will then allow us to discuss and figure out how to advance IGF policy development and implementation, what we need to focus on in the year to come, and how we can support each other in this quest until we meet again next year. We here, all around the table, we are an ambitious community. And this topic requires that, that we are ambitious, and we need to remain so. And we need to realize that the future lies in the recognition that now more than ever, our organization needs to be agile, focused, and flexible. Let's discuss what is needed to advance this policy area from a strategic perspective, and how AFI and our partners can support such needs. So we are really looking forward to this exchange with all of you. There's already a lot of movement around green finance policy development globally, but we need to go deeper, ensuring that we can include those at the base of the pyramid in the efforts both to build resilience and to enable mitigation to climate change and environmental degradation. This is where inclusive green finance becomes very relevant. We can leverage financial inclusion to support climate and environmental action. Through this approach, financial regulation can help those at the base of the pyramid to build their capacities to adapt the changing climate and contribute to low carbon development. I think this has been shown in the past years, and we already have seen a couple of very convincing examples from the members. This is the core of today's gathering. How can we further leverage financial regulation to deepen the drive for inclusive green and environmental action? I'm very happy to note that there are already several AFI members who are developing inclusive green finance policies under the Maya Declaration. We already have 9 countries that have made commitments on IGF. I support Governor Zandamela in asking our members to include IGF in the Maya Declaration commitments. financial regulators are in a very good position to influence actions toward the national climate agenda and through that the implementation of the Paris Agreement. Furthermore, financial regulators in the southern part of the world, in the global south, are in the best position in terms of putting those at the base of the pyramid into the core of support for climate and environmental action to ensure that they are not left behind in the transition. Well, as we move into the discussions, which is going to happen in a few minutes, we recognize the work of those who are already ahead in this policy area. We are learning a lot from your experiences and examples. On the other hand, as we look into our national context, let us also think about the next steps, about the action needed to advance IGF. Which direction should we be taking, and how can you move IGF forward in your own countries? I would not like to close this statement without recognizing the broad support that we receive from the stakeholders, but also from our funders, particularly also the German Ministry for the Environment, who has helped us to put some of these works together. And of course, once again, thanking all the members who are driving this very, very important agenda. Thank you, and we look very much forward to the exchange of ideas and experiences in the next couple of moments and hours. Thank you so much.
Thank you so much, Dr. Hanning, for highlighting the development of IGF or inclusive green finance over the past years, and also sharing the importance of the I in IGF, how inclusive elements need to be built into all green finance policies and frameworks, but also for sharing the importance of in-country implementation and highlighting the importance of Maya Declaration commitments. Thank you so much. These opening remarks, they have given us an important strategic perspective to enable us to dive deeper into the topic of inclusive green finance. And during today's conference, we will have time and opportunity to discuss how to advance IGF globally and nationally, as we already heard, but also to celebrate the Maya Declaration commitments made on IGF, and also to take part of recent research on inclusive green finance. And that brings me to the framework that was mentioned both by Governor Sandamela and by the Executive Director of AFI. So for this next session, it's really a great pleasure for me to introduce to you Professor Ulrich Woltz. Professor Woltz will be sharing with us the main findings of a reflection paper on inclusive green finance, including a whole new framework of this policy area. It has been very positive working together with Professor Woltz and his team at SOAS University of London in developing this reflection paper. It's called Inclusive Green Finance from Concept to Practice. And this paper, it's the fruits of a collaboration between AFI and the SOAS University of London, and it brings an additional conceptualization to this policy area. Professor Woltz, he's a founding director of the Center for Sustainable Finance and a reader in economics at SOAS University of London. He is also a senior research fellow at the German Development Institute and honorary professor of economics at the University of Leipzig. Ulrich is the director of the Global Research Alliance for Sustainable Finance and Investment and serves on the advisory board of the International Sustainable Finance Center and the Sustainable Finance Data Initiative. So it's a great pleasure to give the floor to Dr. Ulrich Woltz to share with us the main findings in this upcoming reflection paper. Please.
Thank you very much, Johanna. I hope you can hear me well. It's a great pleasure and privilege to present to you today this reflection paper on inclusive green finance. If the next slide could please put up. So in this, so it's been really a great pleasure working with the AFI team, and I'd like to thank very much for making this collaboration possible. In the presentation, I want to focus on the conceptual aspects of our study. So there are also a lot of examples from practice, not on the very important work that several AFI members have done in the area of inclusive green finance, but I will very much focus on the conceptual aspects. Next slide, please. You all know that green finance has become one of those mega topics in financial markets, and central banks all over the world, regulators all over the world are now taking this very seriously. And of course, a lot of central banks, regulators in developing emerging economies have been working for a long time on financial inclusion, trying to promote this very important agenda. We know that there are important overlaps between these two areas, but in practice, often they have been treated as two work streams, and also the literature has treated those mostly separately. But we do know that the key target groups of financial inclusion tend to be disproportionately exposed to risks and impacts of local but also global environmental change, and that at the same time they also play a very important role in mitigating environmental change. Next slide, please. So there is an important overlap, and of course in this context I don't need to really emphasize that, but we are trying in this study to present a holistic approach that combines green finance and financial inclusion in an integrated policy framework. Next slide, please. So let me go through the conceptualization of inclusive green finance. Green finance has two major goals. One is the adaptation side and one is the mitigation side. And there are important roles that financial inclusion can play for both dimensions, and I'll go through both of them. So we know, as has been pointed out, that climate change can have significantly negative impact on people at the base of the economic pyramid, and also true across countries. So we know that developing economies are much more severely affected by climate change, but also within societies. And climate change is very much compounding existing risk and vulnerabilities, including ecosystem goods and services, water scarcity, agriculture, food security, involuntary displacement, migration, and conflict. Next slide, please. And we know that a large number of low-income households live in less favored agricultural areas or low-elevation coastal zones and face much higher risk. And unfortunately, these households tend to have fewer resources available to protect themselves against shocks. So there is evidence that climate change is hurting low-income households more than the rich. But we also know that these inequalities affect the business world. So I myself have contributed to a strand of research that has shown empirically that climate vulnerability increases the cost of capital for firms in climate vulnerable areas, and that the access to finance is also worsened by climate vulnerability risk. So this is a big problem for many micro, small, medium enterprises. And financial services can play a very important role in empowering vulnerable parts of the population, both households and small businesses, to adapt to climate change. And but of course, these financial services need to be accessible, useful, and well designed. So they need to be well targeted. And even though a lot of traditional financial services have in the past helped achieving supporting vulnerable parts of the population, there is a lot of promise in digital financial services. So moving forward, this will become ever more important. Next slide, please. Here are the basic elements of climate change adaptation as put forward by the Global Commission on Adaptation. So we need to seek to reduce climate and other environmental impacts. We need to prepare everyone in the economy for climate hazards, and we need to be ready to be quick in restoring operations once climate disasters have struck. And there are a lot of activities that fall in this adaptation categories, and inclusive green finance can play a very important role in here. So just to name one specifically, providing financial support to smallholder agriculture that can then adapt their production means can make a big difference. Next slide, please. Next slide, please. The second important dimension is financial inclusion and mitigation. It's important to recognize that economic agents at the base of the economic pyramid are an important part of global mitigation, even though it's very clear that the bulk of greenhouse gas emissions are not coming from poorer people in developing emerging economies, but still it is important to include them in mitigation efforts. And financial inclusion can make a very important contribution to helping the much needed transition to a low carbon economy. Next slide, please. So just to illustrate the importance of involving small, medium enterprises and micro enterprises, in China, around small enterprises produce, in China, micro, small, medium enterprises produce around half of the CO2 emissions. So involving them in the mitigation efforts is really crucial. Agriculture, as you know, plays a very important role in carbon emissions. And it's not only large agro businesses, but we also need to make sure that smallholder agriculture adapts its business models and goes low carbon. And this is, of course, also very important for biodiversity protection, which is becoming ever more important. Next slide, please. The problem, however, is that even though technological change to cost saving, to new carbon neutral or low carbon technologies can be cost saving, many businesses may not be able to afford them because the upfront investments are higher, and financial inclusion efforts can make a real difference here. And we have very good examples already. So we have, for example, pay-as-you-go financing schemes that have helped micro, small, medium enterprises to transition to more climate-friendly technologies, helping to save energy and water. And there are very good examples. And the important point here is that this is also cost saving for these companies. So it's a win-win situation. Next slide, please. So we need to enable businesses, but also households, to undertake crucial investment that can help them to improve their own development prospects, but also reduce their carbon and other environmental footprint. So for an example, changing to clean cookstove technology can actually make a huge difference, not only in terms of carbon emissions, but also in improving the health situation of these people. So there are really win-win situations, but people need to be put in a position where they can make crucial investments. And different financial inclusion and maturity transformation services can be really important to make a difference. Next slide, please. One aspect I want to highlight in particular, because I think this is really important and has been one of the missing links in the discussion, is the role of inclusive green finance in facilitating a just transition. So a just transition is to making sure that no one should be left behind, as Governor Zambi's introduction remarks, in our move towards the low carbon economy. And this is not only an issue of justice, it is also crucial to make this change, this transition happen, because we know that climate change, but also climate policies can have disproportionately strong effects on poorer, vulnerable people. And inequality may inhibit progress in this move. Next slide, please. Indeed, social risk stemming from inequality can inhibit a successful transformation to a low carbon, environmentally sustainable economy. And we have all seen the example of the so-called Gilets jaunes, so the yellow vest protests in France in 2018 and afterward, where people went to the streets because they felt the climate policies that were implemented placed an unfair burden on themselves. And so it is really important to make sure that climate policies are just. And the Paris Agreement does very explicitly acknowledge this. So it puts forward the imperative of a just transition of the workforce and the creation of decent work and quality jobs in accordance with nationally defined development priorities. Next slide, please. So it is really important to emphasize that vulnerable groups play a key role in achieving a just transition to a resilient and environmentally sustainable economy. And without improving and addressing the socioeconomic situation of these people, climate mitigation policies may very fierce opposition. And of course, inclusive green finance is not a silver bullet. It's not a panacea, but it can play an important role in supporting vulnerable groups, in adapting to global environmental change, and in strengthening their resilience and enabling mitigation of climate change and environmental degradation. I think that's a very important aspect. And this is also nicely highlighted, actually, a decade ago by UN Task Force on Social Dimensions of Climate Change, and I quote, "People are not only the victims of negative impacts of climate change, they are the drivers of climate change and the essential agents for redirecting development trajectories. Climate policies will consequently succeed, fail, or at minimum be enhanced by the everyday actions of empowered and capable individuals, households, communities, and countries." Next slide, please. So there is a really important human dimension to the just transition. We need to make sure that workers, communities, consumers, citizens are empowered. And for this, inclusive green finance can make an important contribution. Next slide, please. So basically, we need the financial sector to enable investment in new opportunities for those affected by environmental change. We need to make sure that people and communities who lose their jobs or livelihoods because of the low carbon transition, but also because of the physical effects of environmental change, need that they find new employment and opportunities. We need to make sure that those at the base of the economic pyramid that are disproportionately affected by the impacts of environmental change, that they get specific support. Next slide, please. But I also want to highlight the great importance of the financial stability dimension of the just transition. So we have regulators and central bankers here in this meeting. And you are, of course, very much concerned about financial stability issues. And it's important to emphasize that there is an imperative of a just transition also relating to financial stability. So if we delay the just transition or fail to achieve it, we are increasing the likelihood of catastrophic climate change scenarios, which will have potentially dramatic consequences on our economies, financial systems, and social stability. And the NGFS has pointed out very clearly in its publications that for the financial sector, a delayed, disorderly transition will amplify climate-related transition risks. So these transition risks will get worse if we don't achieve the just transition. And there can be all kinds of impacts on non-performing loans, but also broader financial stability implications. And so it is important, therefore, that financial regulators consider social stability risks associated with the low carbon transition, and that financial authorities actively try to support the scaling up of green and inclusive finance to smoothen the transition. And it's clear that regulators and central bankers cannot do all this alone, but they can complement other public policies aimed at fostering the just transition. Next slide, please. Inclusive green finance can help new businesses to develop in areas that are aligned with climate and sustainability goals and become more resilient to the impacts of climate change. And so it's really about empowering the base of the economic pyramid to be a driver of the transition and thereby making it just. So this is a really important point. Next slide, please. Here in this chart, you can see an attempt to summarize different links between climate change and environmental degradation, vulnerable groups, social inequity and tensions, and financial stability. We have vulnerable groups in the middle of this chart, and they are exposed to climate change and environmental degradation, but they also have an impact themselves on climate change and environmental degradation. Vulnerable groups are, of course, affected by worsening social inequality, but also they themselves can contribute to social tensions. And it's important that inclusive green finance can help vulnerable groups adapt to climate change and also help improve the social problems that we are facing. And it's important to emphasize again that without involving the base pyramid in mitigation efforts and making sure that social problems are being addressed, we will not be able to achieve a just transition to a resilient and environmentally sustainable economy. And importantly also, we need to recognize that there are financial stability risks stemming from climate change and especially a delayed transition and also from social inequality problems. So we need to see all this holistically and make sure that vulnerable groups are supported sufficiently. Next slide, please. So we are putting forward a new policy framework for inclusive green finance. And the good news is that financial regulators and supervisors and government finance executives have a lot of tools at their disposal to turn the concept of inclusive green finance into actionable policies. And many of the RFI members have been indeed at the forefront of doing this. And in harnessing the synergies between green finance and financial inclusion, all of you can help improve the livelihood of low-income households and micro, small, medium enterprises, while at the same time contributing to climate change adaptation as well as mitigation. Next slide, please. So here you have this policy framework. We have in the two rows, we have the two goals of green finance adaptation to environmental change and enhanced resilience, and mitigation of environmental change. And we have in the two columns market shaping policies and direct interventions. And inclusive finance policies can be used in both categories, in the market shaping policies and the direct interventions brackets, to enhance adaptation and mitigation efforts. And just to give you a few examples, so on the direct intervention side, digital cash transfers to disaster affected people can be used. Subsidies are guaranteed for credit to invest in adaptation, resilience enhancing activities, directed credit, sectoral credit targets, and so on. For mitigation, similar policies can be used. In the other column, you have these market shaping policies. And again, there is an abundance of approaches that can be taken that can make an important difference. And I have some echo now. If someone could please mute themselves. Thank you. So market shaping policies, for example, it's about enabling, implementing regulatory enablers for mobile money, microinsurance, and other resilience supporting financial services, which may be digital indeed. It's about enacting environmental social risk management guidelines that can help incorporate environmental and social risk. Awareness raising, taxonomies, consumer protection are of course also important areas. And on the mitigation side, you have also regulatory enablers, for example, for pay-as-you-go solar and water schemes, prudential rules, awareness raising and guidance and incentives. So there are a lot of things regulators and central banks can do to promote inclusive finance and green finance. Next slide, please. And I'd like to emphasize that this policy framework aligns very well with the 4P concept of inclusive green finance that AFI has developed over the last 2 years. So in the market shaping policies and initiatives bracket, you have these promotion policies and prevention policies. On the direct intervention policies and initiatives side, you have provision policies and protection policies fall into both these brackets. Next slide, please. So just very briefly before wrapping up, I'd like to highlight also that inclusive green finance has a particularly important role now to play in the COVID crisis and recovery phase. The crisis has very much showed how vulnerable we are to natural disasters, but it has also shown how people can harness financial services, especially in digital form, to better deal with such shocks. And we've seen great examples, for example, how mobile money payments have helped people, especially in sub-Saharan Africa, as friends and families have supported each other during lockdowns. We've also seen governments around the world taking advantage of financial inclusion efforts to channel support transfers to vulnerable people through different networks and channels. Next slide, please. But going forward, it is really important that policymakers support a green and inclusive recovery by exploring the synergies between green finance and financial inclusion, financially that first address equity concerns, second, facilitate a transition to a low carbon economy, and of course, while making sure that financial stability is being safeguarded. And only when financial policies reflect and incorporate these three dimensions, we can really make sure that the economic recovery becomes a catalyst for the just transition that we need. Next slide, please. Okay, I've spoken far too long, but I need to wrap up now, and I'll try to be quick. So going forward, the financial sector needs to make important contributions to facilitating a just transition to a low carbon, environmentally sustainable economy. Let me emphasize again that I think this has been one of the missing links in the discussion. And even though inclusive green finance is not, it can play an important role in supporting vulnerable groups to adapt to global environmental change and strengthen resilience. And it can also facilitate mitigation action of vulnerable groups. And this can make a big difference while at the same time supporting economic opportunities. Next slide, please. And if we are not successful in empowering households at the base of the economic pyramid and enhancing the business opportunities of MSMEs, we will not be able to achieve a just transition, and this will have very detrimental consequences, including adverse effects on financial stability. It is therefore very important that central banks and regulators really address the environmental and the social risks to the stability and functioning of the financial system through prudential policy and also by supporting IGF. Next slide, please. So going forward, central banks and regulators should seek how to mainstream sustainability considerations in their monetary and prudential frameworks, addressing both environmental and social factors. And we already have very good existing examples for IGF policies from the AFI network. Based on these, policymakers can consider how to use market shaping policies as well as direct interventions to promote IGF. And next slide, please. In doing so, it is of course important to take a gender sensitive and also intersectional lens, because we know that there are different groups, and we have women, minorities, rural and low income households that are particularly affected by financial exclusion, and we need to make sure that IGF policies really take the specific needs of these various groups into account to make sure that measures are targeted and effective. And in closing, I would just like to say that, of course, we have a lot of traditional financial service approaches for inclusive green finance or inclusive finance, but there is a lot of promise in digital financial services. But in developing those, it's also crucial to make sure that we have sufficient consumer protection safeguards to make sure that there are not new problems arising. With this, let me finish, and thanks very much to the team for a very fruitful collaboration, and I hope that this will help shape the policy framework going forward. Thank you very much.
Thank you very much, Professor Woltz, for this presentation. This is indeed adding another layer of conceptualization to inclusive green finance. And I think what's really great about this, it's linking IGF closer to the ongoing discussions on green finance globally, and clearly drawing the links between the base of the economic pyramid, financial inclusion, mitigation, adaptation, and through that, a just transition and financial stability. So really closing the gap in all of the arguments, but also highlighting that this is a framework that strategically complements the 4 Ps of inclusive green finance and encapsulates this policy area we have been carving out together in the past years. And as many of you are aware, and as Professor Woltz mentioned, there are a number of examples already of IGF policies and initiatives from the AFI network, and we will be exploring these a little bit more in the coming session. Now, if you have any questions to Professor Woltz about this paper that Laura also shared with you through the chat, or about the framework specifically, feel free to raise your hands or to type the question in the chat box. I don't see any hands at this point, and I haven't seen any questions. But I'm also happy to share that this is also the framework for our breakout rooms in the next session. So thank you very much, Professor Woltz, for this presentation. So this very smoothly brings us to the next part of the conference. We will be divided into breakout rooms, and we will have a group discussion. And the objective of these group discussions will be to ponder IGF policy development more in depth, and most importantly, discuss what is needed to advance inclusive green finance nationally and globally. There will be a team setter as well as a moderator in each of the groups, and the team setters will be sharing insights about the different topics and the moderators will be leading the discussion. There will also be specific questions touching on gender inclusive finance and the use of digital financial services. And the objective of the session is really to provide the platform to take stock of the IGF policy developments using the new framework just presented to us, and having a guided discussion to chart out our next steps for IGF. I think this is a moment after many years of developing this policy area where we need to take stock and really ponder what are the next steps and how can we work together to advance this area. So the group discussions, they will evolve around sharing of insights and driving inclusive green finance at the global and national level. And the team setters, they will be presenting the key recommendations that were discussed in each of the groups back here in the plenary when we come back in approximately 45 to 50 minutes. Next slide, please. So these are the guiding questions. I'm not going to dwell on them more as you will have opportunities in the breakout rooms to discuss these. Next slide, please. So with this, it's really a great pleasure to introduce you to our moderators and team setters today. The team setters are all from the leadership of the Inclusive Green Finance Working Group. So the first group that will be tackling mitigation policies, both market shaping and direct interventions. The team setter is Najwa Mouahri from Banco Al Maghrib, and the moderator is Efwe Kodadje from the AFI management unit. This group will be conducted completely in French. The next group with the same topic, the second mitigation group, the team setter is Audrey Hove from the Reserve Bank of Zimbabwe, also the chair of the Inclusive Green Finance Working Group, and the moderator is Laura Ramos from the AFI management unit. This will be a blended group where there's most of the discussions will be happening in English, but if anybody wants to express themselves in Spanish, that's also possible. The two other groups are going to deal with adaptation. The third group with the team setter Veronica Bayangos from Banco Central Engie Filipinas and the moderator Jen Muling from the AFI management unit. And the fourth group, market shaping and direct intervention policies adaptation, also all in English, with the team setter, Patience Yeboah Nkansa from the Bank of Ghana, and I will be moderating the session. You have all been pre-assigned for these different breakout groups. If you would have any problems, for example, if you put in the wrong language group, feel free to exit the group and come back to the plenary or to raise this issue to the moderator. We will reconvene here in the plenary in 45 minutes. Just a heads up, you would need to accept to be directed into the breakout room. There will be a small screen popping up in front of you, and you need to say okay in order to be directed to the breakout room. So with that, I welcome you to actively take part, switch on the cameras, and start the discussions in the breakout rooms. Please, Emilia, feel free to start the division.
The room is open.
I hope you all had very fruitful and good discussions and deliberations during the breakout rooms. The session that will follow now will be a stock take from the group discussions, as well as further reflections on the path forward. So first of all, we will hear back to the plenary from each of the team setters, and we will be sharing the main recommendations coming from each of the breakout rooms. After that, there will be further reflections on these recommendations provided by the first Deputy Governor of the Central Bank of Seychelles, Christophe Edmond, as well as Professor Uli Volz. So without keeping you longer, I would now invite the team setter, Najwa Mouahri from Banco Al Maghrib, to share the main recommendations from Group 1, mitigation, market shaping, and direct intervention. And I believe Najwa will be reporting back in French. So for those who haven't yet, please choose French, the translation if you need such in the Zoom modality. Please, Najwa, and I would ask Efwe to share the screen so we can see the main recommendations from group number 1.
Can you see my screen? Okay, go ahead, Najwa, please.
It's the last slide, I think, which summarizes all the recommendations.
Just the recommendation, okay, then. Having an issue with this. Can you see my screen now?
Yes, perfectly.
Okay.
Thank you, FOE. Merci. Bonjour à tous. C'est un réel plaisir de prendre part à cette nouvelle édition de la conférence de haut niveau sur la finance verte inclusive, qui traite un sujet qui prend de plus en plus d'ampleur et qui est d'un commun intérêt pour nous tous. Donc, lors de cette session de groupe, on a pu avoir la chance et l'opportunité d'échanger autour de la question des politiques liées à l'atténuation du changement climatique, à savoir celles qui influencent le marché, mais celles aussi par voie d'intervention directe. Donc, ça nous a permis non seulement d'avoir une vision éclairée de l'état des lieux, des politiques visant l'atténuation du changement climatique et de la dégradation environnementale à travers les pays membres de l'AFI, mais ça nous a permis aussi d'avoir une vision plus claire sur les prochaines étapes, les priorités pour faire avancer et progresser ces politiques-là. Donc, je vais citer les principales recommandations sur lesquelles on s'est tous accordés, notamment l'élaboration d'une taxonomie sur la finance verte inclusive. Donc, pouvoir établir un langage commun, c'est très important pour pouvoir disposer de méthodologies, de définitions, de mesures communes, pour pouvoir notamment distinguer entre l'atténuation et l'adaptation et pour pouvoir mieux allouer les financements et pouvoir promouvoir ces financements vers la finance verte inclusive. Deuxième point, et là c'est plutôt à l'échelle internationale, donc ce qui a été soulevé, c'est la nécessité d'une meilleure coordination à l'échelle internationale, du moment que plusieurs organismes s'intéressent déjà à la fois au sujet de la finance verte mais aussi de la finance inclusive. Donc, pourquoi pas ne pas faire converger les compétences, les connaissances de ces organismes-là pour pouvoir avoir des recommandations harmonisées pour faire évoluer la politique inclusive verte. Et pour ces organismes-là, donc ce qui a été cité, c'est notamment le NGFS, l'AFI, les Nations Unies, etc. Donc, il y a un réel besoin d'une meilleure coordination entre ces organismes-là pour plus avoir des recommandations fragmentées et pouvoir évoluer vers la même voie de la finance verte inclusive. Le troisième point qui est tout aussi important, c'est la finance digitale. Donc, on s'est tous accordés sur l'opportunité que présente la finance digitale et numérique pour faire évoluer la finance verte inclusive, puisque la finance numérique, en fait, elle répond déjà à l'objectif de l'inclusion financière en permettant d'allouer des financements à des populations éloignées ou exclues à moindre frais, mais elle mobilise aussi déjà la finance verte parce qu'elle réduit les déplacements et parce que aussi elle permet d'améliorer l'efficacité en réduisant les coûts de transaction. Quatrième point, c'est le fait de faire évoluer les réglementations prudentielles existantes pour intégrer la finance verte inclusive, à savoir les exemples qui ont été donnés, c'est les assouplissements prudentiels qui ont déjà été mis en place par les banques centrales pour pouvoir promouvoir le financement vers les TPME et le monde rural ou les femmes, pour pouvoir aligner ces réglementations-là pour intégrer la dimension verte et environnementale. Et le cinquième point, c'est la sensibilisation des populations cibles, à savoir les MPME, la population rurale et les femmes sur les enjeux et les opportunités liées au changement climatique et à la dégradation environnementale, mais aussi la communication autour des politiques qui visent à promouvoir la finance verte inclusive pour avoir une meilleure réponse, une adhésion collective de toutes les parties prenantes et un engagement plus important de ces parties prenantes-là vers la finance verte inclusive. Et puis un dernier point qui rejoint l'ensemble des points, c'est l'intégration des femmes dans l'ensemble de ces recommandations-là, à savoir le fait, on s'est accordé sur le fait de devoir orienter l'ensemble de ces politiques et de ces priorités qui ont été recommandées pour tenir compte des défis et des besoins des femmes qui sont les plus vulnérables au changement climatique et à la dégradation environnementale, mais qui sont aussi de puissants agents de changement qui peuvent contribuer à faire évoluer l'atténuation du changement climatique et environnemental. Donc voilà, merci.
Thank you so much, Najwa, for sharing those recommendations and insights from the first group. I was typing away intensely just to capture all of them. I think those are really great recommendations going forward. With that, we move to the next group, the combined Spanish and English one. And I welcome Audrey Hove from Reserve Bank of Zimbabwe to share the main recommendations from this group.
Thank you, Joanna. Thank you, Laura, for sharing the screen. We also had very intense discussions. It was a very active group that I was in, and members were able to share their perspectives in terms of how best we can address the issues on mitigation. So the first question that we were looking at we were looking at what would be the next steps to advance policies towards the mitigation of climate change and environmental degradation. And we're looking at it from a national perspective as well as the global perspective. From a national perspective, we were saying there's need to incentivize the market, that is the financial sector providers, as well as maybe the MSMEs, and those that are at the lower end of the bottom of the pyramid. So in this case, we were recommending that the government can actually come up with either tax holidays or even tax credits, which could actually benefit, the tax credits would actually benefit the financial sector providers, while maybe the tax holidays could actually benefit the MSMEs as they support projects that are related to mitigation of the environment, of environmental degradation. Then the second point that we looked at in terms of from a national perspective, we're saying there's need for communication and sensitization to contribute to lower carbon emissions, because we also noted that in not many cases that everyone understands, and therefore there's need for that sensitization to indicate whether it's MSMEs who are involved in activities that are emitting carbon, would want them to understand the impact of the activities to the environment. And the third point that we looked at is promotion of new technologies through lending facilities. And on this one, we were also looking at these SMEs that are using maybe technologies that have got an impact on the environment. How do we come up with new technologies which they can use and benefit? How do we promote? How do we, even as financial sector regulators or policymakers, how do we engage with companies that are involved in developing new technologies that facilitate mitigation of climate change? And then we also looked at the need for innovative green funds, that is the collaboration of the private sector and the public sector, that is the PPPs. How do we come up with green bonds? How do we come up with blue bonds, which can actually support mitigation programs? And then we're also looking at how do we encourage the use of financial mechanisms to offer target lending or lending guarantees. Then from a global perspective, we're saying there's need for capacity building to the financial sector, because we also believe that in green finance, inclusive green finance is actually a new thing for most of our financial sector players, and therefore it would be necessary to actually invest in building capacity. And the second point, we're looking at fostering policies that impact livelihoods of vulnerable people. And we were also looking at how do we look at the different activities that could be done with the same or better outcomes without impacting negatively on the environment. So in this case, we also given an example to say this can be in two ways. Either we look at substituting an activity that maybe an MSME would have been undertaking, or individual families would be undertaking, in many cases, which actually benefits them directly. So in that case, we're saying, for example, if a family is involved in tobacco production and they are cutting down trees to cure their tobacco, is there a way of maybe encouraging them to invest in growing macadamia nuts, which would actually have a positive impact on the environment? Or we can then look at the breadwinner in that family or the head of the house. We consider another activity that they may be involved in, which may not be in the same geographical location, and they are still able to support their families through remittances. And then from a global perspective, we're also saying there's need to have a global fund for climate change impacts, which is especially for the low income countries. I'm sure COVID-19 has also shown us that there's need for countries to actually have maybe contingency to support such activities. And then the fifth point that we looked at is public-private dialogue to optimize on long-term outcomes, because we also felt that sometimes the public sector is speaking to activities which are supposed to be undertaken by the private sector, where in many cases there is no clear communication or clear understanding on the issues at hand. Okay, that was the first area that we looked at. Maybe we can look at the second point, the second question. Next slide. Okay. The second one, we're looking at, the question was, are there existing financial inclusion policies or initiatives that could be repurposed or adapted to include mitigation objectives? We said yes. We came up with 4 of them to say maybe if we have target lending, for example, if we're going to be focusing on women that are usually generally affected by issues of climate change, how do we make a deliberate effort to support that segment? Or maybe if we are looking at MSMEs, or we are looking at lending to certain geographical location, but we're looking at target lending. The second point, we're looking at technological innovation through digital financial services to say, can we leverage digital financial services for the delivery of the financial products and services to the areas that are affected by climate change? And we're also saying there's need to have maybe credit guarantees, and policymakers, including maybe the financial sector regulators, they can come up with credit guarantees to support access to finance by these marginalized segments through formal financial sector providers, financial services providers. And then we're also looking at financial education, where we were saying, as we are delivering financial education programs, we can actually be sharing on the importance of undertaking projects that do not have a negative impact on the environment. We can move on to the next slide. Okay. The third question that we looked at is what could be the role of digital financial services in implementing these policies? We came up with 2 recommendations where we were saying DFS can actually facilitate easy access to finance, is maybe disbursements or repayments, even application for loans can actually be done electronically. And we're also saying DFS can actually facilitate in bridging the gender gap, because we know in many cases, women, they're not confident to actually be accessing financial services directly from financial service providers, whether it's branches or dealing directly with the banks. But with digital financial services, it means the service can actually be delivered in the comfort of where they are doing their undertaking their activities, and therefore assist them. And we know women are the ones who are mainly affected by such climate change issues. Let's move on. The fourth question that we looked at is what are the specific gender consideration for mitigation related IGF policies? We said technological innovation is very important. In this case, maybe we are looking at substituting cook stoves where we are using charcoal, which requires cutting down of trees, maybe using issues like biogas. And we know women are the ones who are running the homes, and therefore that technological innovation will actually assist in supporting their activities. And we also said awareness on green activities or facilities is also important because in some cases, these women are not even aware of the impact of the activities that they will be undertaking on the environment, and therefore to bring to the fore alternatives and the impact of the activities would be critical. And then we also looked at ensuring there's a collection of sex disaggregated data for purposes of assessment. So we are saying as facilities are being displaced, as initiatives are being undertaken, there's need to actually understand what is the impact of these initiatives on women using sex disaggregated data. And then we're also saying there's need to identify productive initiatives with a gender perspective. So these are the recommendations that we came up with under the fourth question. Maybe I think fifth question, we should be maybe our last question. Okay. The question that we looked at was on how will COVID-19 global pandemic affect moving mitigation related IGF policies. We noted that with the COVID-19 pandemic, there's been a need for social distancing, and this has actually affected the implementation of projects that are related to inclusive green finance. And we also noted that the closing of borders is also impeded on business development. For example, if a country was implementing a project that requires importation of raw materials or inputs, for example, if it's implementing a project related to solar and there's need for solar panels coming or batteries coming from other countries, that would have stalled the implementation of such a project. And we also noted that with the COVID-19 pandemic, governments now have got different priorities. So where governments were planning to invest in green projects, such projects may have been set aside for them to actually focus on dealing with the pandemic. And therefore, the financial constraints would have delayed implementation of some of the projects. And then at household level, we have noted that many households have been negatively affected in terms of revenues. And in that regard, they are not able to actually spare additional resources, which could have been actually used to implement certain projects within their households to support the environment. And on a positive note, we are also saying there's need, we are also seeing the green post-COVID-19 recovery. I think we are all aware that with the airlines grounded, with most of the cars at home, we also saw a benefit in terms of polluting the environment, where we have observed that there's been less of that, and therefore we can actually pursue that agenda and ensure that we continue on a green environment. So I think this is what we covered. I'm aware we were supposed to look at recommendations, but due to time, we were not able to cover that area. But I'm sure as members, we can actually contribute, and we're also glad the other group is also largely covered on recommendations. Otherwise, this is our presentation as Group 2. Thank you.
Thank you so much, Audrey. I must applaud your group for being able to cover so much ground during such short time. I know that the rest of us didn't manage with so many of the questions. I think this really brings a lot of important considerations and reflections to the discussions to come. Very good. Then we move on from mitigation to adaptation. And the first team setter will be Veronica Bayangos from Banco Central and Filipinas. Please, Veronica, to share the top recommendations.
Thank you very much, Johanna. Our group came up with interesting and insightful recommendations on adaptation policies. The first is adopting green finance taxonomy for the vulnerable sectors, such as for the MSEs and low-income households. We feel that this would be useful, especially if we can define what green taxonomy is, the scope, the coverage, and main elements of green finance. The second recommendation that we came up with is translating the environmental and climate discourse into a common language that the financial sector understands. Here, what we are trying to recommend is to come up with awareness raising and capacity building measures for not only the financial authorities, but also for financial institutions. The third recommendation is to elevate the importance of the inclusive green finance to standard setting bodies, because at the moment what the group raised is that the main standard setting bodies such as the BIS and the International Monetary Fund lacks the inclusive element of green finance. It is important for this standard setting bodies to appreciate the importance of bringing in the inclusive element in green finance. The fourth recommendation has something to do with the gender aspect of green finance. The group raised or recommended that lending to women, especially in the rural areas, be introduced, and complementing this with financial services, with capacity building to help women build their capacity. So this has something to do with capacity building measures for vulnerable women in the rural areas. The fifth and last recommendation, which is a long shot, is the inclusion of inclusive green finance in the objectives or charter of central banks or financial institutions to ensure commitment to inclusive green finance. So those are the top 5 recommendations that our group came up with, Johanna. Thank you very much.
Thank you so much, Veronica. I think this is one of the first times we also hear the recommendation of elevating the importance of inclusive green finance to standard setting bodies, and a number of other very, very useful recommendations. So thank you very much for sharing these. Then we move on to the fourth group, which is on adaptation. And I will be inviting Patience Yeboah Nkansa from the Bank of Ghana to share the main recommendations from this group. And one moment, I'm going to share the screen.
Hi, Johanna, are you ready?
Yes, can you see the screen, Patience?
Yes, I can see the screen.
Amazing, thank you.
Thank you very much. We're looking at the top recommendations. The first one at the national level is one, for the governments of the various economies to identify priority areas, okay? And this should involve national leadership and strategic goals. The second one is coordination. And we are looking at all stakeholder coordination, right from various governments, parliamentarians, regulators, the private sector, environmental protection agencies, right down to the academia and then to the even to the primary school levels. Okay, and then we are looking at this vis-a-vis the importance of capacity building, both for central bank staff and different stakeholders. Not only the central bank, we are looking at the Association of Bankers, etc. We also looked at financial literacy framework. Okay, for inclusive green finance, everybody should be financially literate. How do we achieve this? Okay, reaching all consumers within the rural, sub-suburban areas, etc. Financial literacy is very, very key in achieving our aims with inclusive green finance. And then we also looked at, for the fourth point, we look at the environmental and social risk management framework for banks and financial institutions, from guidelines to directives, okay, including annual reporting to the central bank, where Ghana we have started. Comprehensive vulnerability assessment at both economy, both at large and then the financial system, focus on vulnerable groups. And we're also looking at data collection. These are some of the recommendations. And then importance to develop and promote investments and financial products that mitigate climate risk. We also look at that. And then above all, the importance to include women. And globally, we are looking at assistance from global organizations such as AFI, FIC, the World Bank, then etc., etc. So these are the recommendations. And then the last but not the least is cooperation and support at the global levels, also to the most vulnerable. We need to dialogue, okay, in advance, and then inclusive green finance should be a top priority, especially as the climate is seriously changing. Thank you.
Thank you so much. Yes, thank you so much, Patience, for capturing the main recommendations from the fourth breakout room. So I want to thank all of you for your active participation. And we will now, as we heard from the recommendations from the breakout rooms, we will now have some reflections coming from our esteemed panelists on the recommendations from the breakout sessions, but also their own reflections on these similar questions that were just discussed. So it's a great honor for me to invite the first Deputy Governor of the Central Bank of Seychelles, Christoph Edmund, as well as Professor Uli Woltz, to share their reflections on the recommendations as well as on the questions themselves. So first of all, if I can invite the first Deputy Governor from the Central Bank of Seychelles, could you, from a regulator's perspective, share your reflection on inclusive green finance policy development at the national level, and what do you think would be needed to advance the next steps?
Okay, good afternoon, good evening, everyone. Thank you, Johanna. Basically, for my side, when I look in terms of what we need to do to advance inclusive green finance at a national level, and this was a discussion that we have at my group, which is Group 4. It's important that we have this collaboration and consultation with all stakeholders at national level, because if I take the example of Seychelles, there has been a number of initiatives that have put in place or adopted, but in terms of action or progress, we have seen that it's very slow. Basically, again, when you look at it, sometimes people are told to do something, but there's no commitment, there's lack of focus. And in addition to that, there's the issue of capacity building. So it's important that we build capacity of all stakeholders even at the central bank level, that we feel that this is a fairly new agenda item. So we need to ensure that we build capacity ourselves so that we can encourage the others, and we can also do more awareness, bring more education to all the different stakeholders. So on the national level, like I said, very important that we have this consultation, very important that we have this awareness, and also beef up our financial education also strategy to ensure that we include the element of green finance in this national agenda. On the international side, or on the global side, like I've said on my side, basically we need to also make sure that we look at all the countries, because Seychelles being a small island state, maybe our voice in the other countries, our voice are not heard. So we need to ensure that the other organization like AFI, we are also in SADC, there are the World Bank, IMF, and also we are part of the NGFS. All these institutions, if they can also listen to the voice of all the countries, no matter which size you are, because still you will be impacted by climate change. And it's important that the policies that are decided, that are implemented, takes care of everyone. All the vulnerable countries, all the vulnerable population needs to be accounted and part of the discussion and the policy decision that is taken into consideration. So that will be my contribution for now.
Thank you so much, First Deputy Governor. And then over to Professor Volz. Would you have any specific reflections or recommendations coming out of the discussions we just had, maybe more from an academic perspective?
Yeah, thank you, Johanna. Well, I think we had an excellent discussion within our group, and also there have been really excellent points made by the presenters from the other working groups. I would like to emphasize 4 points. The first one is, I think it's clear that we really need to talk about mainstreaming environmental and social aspects across financial policy making. So in the past, financial inclusion, but also green finance have often been a bit like, kind of, well, we need to nurture this particular element of finance. But I think we really need to take this holistic perspective and think about how to mainstream. So how can we align all our policies in the financial sector, including, of course, prudential, but also monetary policies, to analyze what are the impacts on environment and on social aspects, and how can we achieve better outcomes. That doesn't mean that everything has to be specifically geared towards inclusive and green finance, but we need to see what are potential side effects. So that's my first point. The second point, and I think this has been very clear from many interventions today, there is clearly an increasing role of digital financial services, and I think there's also a lot of promise in using digital financial services, especially for supporting the vulnerable people. But then again, there are also, of course, problems. So there are issues about digital exclusion. Not everyone can really make use of these services, either because they don't have access to digital services, or they are not enabled to use them in a proper way. And of course, there are also issues about consumer protection. The third point I would like to emphasize is we have in the report very much highlighted the importance of market shaping policies, and I do think that is a really important aspect. But I also think it's important to remind ourselves that often we need public bodies, public financial institutions, public initiatives to really help some of the outcomes we need. And just to give 2 examples, one from my home country, Germany, actually much of the kind of green finance, but also inclusive finance in a kind of broader sense, has actually been driven by public financial institutions, so public savings banks, KfW as a public development bank. And when I then look at the UK, where I work, there's actually now very intensive discussions. The government is planning to set up a new green investment bank to push green finance. And so these are just two examples that also in advanced countries, there is an important role on institutions. And I think we are moving back to a situation where the important role that public financial institutions can play is being recognized. So there was a quite a long period where kind of anything related to public sector involvement in the financial market was rather regarded as problematic. I think the Finance and Commons Summit that we've just had a few weeks ago really reflected the potential that the public financial, especially public development institutions can play. And I would say that also extends to the digital. And I think there's a big challenge also for development finance institutions to enhance that. And then finally, going global. So I do think it's really important to involve key global that are shaping global finance and rules for global finance. And Deputy Governor Edmund mentioned some of these institutions, and I would definitely say that at the NGFS, the time has come now to broaden the scope. The NGFS has been initially very much focused on climate risk, and I think that was good because it took some time to really get the message across that this is a crucial issue for central banks and supervisors. But I think it's also now clear that broader environmental issues are a big challenge, and we've seen now a first stress test, for example, from the Dutch Central Bank on a biodiversity risk. And there is, I can definitely say, from my interactions with the NGFS, there is time now also and I think bringing in the social inclusive dimension is important, and I think this is something, an area where AFI can also bring a lot to the table at the NGFS. But also, I would emphasize the importance of the IMF and the multilateral development banks in this agenda. They have been very important in shaping discussions around financial sector development, and so I think they also have to be important allies in promoting inclusive green finance and helping financial authorities around the world in developing these policies. So I think this is also really an important area of dialogue that needs to be continued. And just to throw in, I mentioned that my group, the 20 group of climate vulnerable countries, is now working with the IMF on a IMF V20 action agenda, and this is not focused as yet on inclusive green finance, but it is an attempt to work with the IMF on developing the climate resilience agenda, and of course inclusive green finance really has to be part of that. So I think there are a lot of good opportunities on the global level to advance the agenda further. And AFI and the AFI members, I think, have a lot to bring into that discussion. And with this, let me stop here. Thank you.
Thank you so much, Professor Waltz, for sharing those 4 points. As you're aware, we're slightly tight on time, but I really want to take this opportunity that we have the First Deputy Governor, Edmund, here with us today. So before we move towards a celebration of all of you, I would want to ask a last question from the Deputy Governor, and that's specifically reflecting on the conversation we had in the group, but also what Professor Waltz shared. how do you see the role of digital financial services in advancing inclusive green finance? I know, for example, the Central Bank of Seychelles, you're working a lot with DFS development as well. Is there an intersector? How do you see this moving forward? And of course, if you you agree, of course, also feel welcome to share any next steps on inclusive green finance that the Central Bank of Seychelles are planning, please.
Thank you, Johanna. Definitely, I believe that the DFS will help in developing the IGF forward, and especially when I listen also to the remarks by the governor of Banco Moçambique in his opening remarks, that he has put in place the sandbox regulation or sandbox. And we see that definitely this will bring benefits to the country. So maybe what I can just give an example how I think digital financial services will also help or can also bring new information, new ideas that I can share with the team. For example, if we take an example of a blockchain technology, and this can be used in P2P energy trading, climate finance, and also carbon credit trading. For example, blockchain technology for sustainable applications involve P2P energy exchange, including from distributed energy systems using renewable energy, whereby consumers can generate energy through solar systems, and this is something that in Seychelles we are pushing, or also small-scale wind turbine. And blockchain technology, in this case, could enable them to sell the energy they generate directly to their neighbors. And as a result, based on this technology, the process will be no longer required in terms of the energy companies. In terms of traders or banks for payments, this will be eliminated. This is also a form in terms of how the blockchain technology can help in terms of improving or advancing inclusive in finance based in terms of the DFS. But on the other side, one example that I can also share, because although we know that DFS can be beneficial in advancing the IGF policies, there is a need to be mindful also of the impact that technology also plays vis-a-vis climate change. So a recent Financial Times report articulates that moving towards more technology-based approaches does have an impact on carbon emissions and chain of energy burning electronics. For instance, it was claimed that if you take a country like British, so they send one fewer thank you email every day, it will save them about 16,000 tons of carbon a year, which is equivalent to about 1,000 flights to Europe. So there's both the positive side. At the same time, given that we're talking about climate change, there are other issues that will impact also climate change when we put in place digital financial services. But I'm of the view that we can benefit more from digital financial services, although we take note of its negative side that it can have on climate change. So, sorry, then you asked me, just recall another question regarding, Johanna, anything else? I think you asked me something else at the end. I just didn't.
Yes, I think just to move from these recommendations and reflections, it would be also great to hear if there's any specific plans by the Central Bank of Seychelles and moving forward on inclusive green finance, please.
Yes, basically quickly on our side, following the in-country training that we got from AFI in August, we have been working in putting in place first the action points for us to discuss with all key stakeholders, especially internally. We need to ensure that we get the buy-in. Like I said earlier, capacity building is very important, and awareness and education is very important. Sometimes people doesn't want to come forward or to be part of the green climate or climate change initiative because they don't understand it. So it is important that we put in place the right action point and we discuss with the right stakeholders so that we can get their buy-in to advance inclusive green finance. So in addition to that, we are also working on a roadmap for sustainable finance for Seychelles and also taking note of the green taxonomy. So it's important that we also make sure that it's clear what we want to include in the definition of green. And this will help when we have a discussion and consultation with stakeholders to get them on board and to make sure that everybody is on board and we understand what we mean by green. Because for Seychelles, even though we talk about green, which is the environment, but we have a blue economy, which is very important also for the country. So all these are the three main areas that we are working on, and we expect that by next year, a number of the initiatives will be completed. But it still remains that we need to do quite a number of consultation to move forward. Thank you.
Thank you so much, First Deputy Governor, and a big thank you also to Professor Volz for sharing your reflections on these recommendations, and also for sharing some more concrete plans moving forward. I think that is indeed the journey we're charting here together. We're now turning to our last agenda point for today, and that is indeed a celebration. We want to celebrate all those AFI members that have already made Maya Declaration commitments on inclusive green finance under the Sharm el-Sheikh Accord on financial inclusion, climate change, and green finance. You are probably all curious about who they are. So congratulations to all AFI members who made these commitments, and we encourage others to follow. Please.
In September 2017, the Alliance for Financial Inclusion endorsed the Sharm el-Sheikh Accord on Financial Inclusion, Climate Change, and Green Finance, which commits AFI member institutions to work together and with partners to identify, understand, and implement financial inclusion policy solutions that have positive outcomes for the environment, focusing on communities that are most vulnerable to climate change. The Accord builds on the Maya Declaration, the world's first commitment platform enabling AFI member institutions to make concrete financial inclusion targets, implement in-country policy changes, and regularly share progress updates. The Accord also contributes to a range of the United Nations Sustainable Development Goals, namely SDG 1, No Poverty, SDG 7, Affordable and Clean Energy, SDG 13, Climate Action, and SDG 17, Partnership for the Goals. Since then, AFI members have been making Maya Declaration commitments in inclusive green finance to build resilience to and mitigate impacts of climate change. The Accord's very first policy change came from Bangladesh Bank with the successful launch of their policy taxonomy on sustainable finance. In the Pacific, the Reserve Bank of Fiji is working with partners to develop and promote sustainable business models to support the community's response to climate change. Across the Pacific Ocean in Ecuador, Superintendencia de la Economía Popular y Solidaria is developing regulations for the implementation of green loans. In North Africa, Bank Al-Maghrib in Morocco is working on implementing actions as part of the tripartite partnership with regards to sustainable finance. Other members working towards policy changes include the Central Bank of Egypt, currently working on a national sustainable finance framework. In Africa, the Bank of Ghana aims to launch and implement their own sustainable banking principles by 2022. Also by 2022, the Bank of Zambia is planning to launch their own guidelines on climate change and green finance. The Reserve Bank of Zimbabwe is promoting investment in green innovation, aimed to have 50% of banking institutions in the country adopt sustainable financing by the end of 2021. Banco de Moçambique is coordinating efforts to implement financial technologies with innovative platforms, business models, products, and services that are green. Congratulations to all AFI members who are working hard to ensure that our future is green and sustainable. At the same time, we are also building resilient and inclusive future for the world's most vulnerable communities. Together, we are taking this incredible journey and look forward to working with more members to build the future we want and to ensure that no one is left behind.
Congratulations to all AFI members who have made these commitments, and we do encourage others to follow. We will also make this clip available through YouTube, as I understand that with bandwidth issues, it's not always easy to stream such a large animation. We are moving towards a closing. Dear Governor, dear AFI members, partners, and colleagues, a big thank you to Banco de Moçambique for co-hosting this conference, and a thank you to all of you for actively sharing and contributing to the last now almost 3 hours of the deliberations. I want to congratulate you on agreeing on a number of measures needed to advance inclusive green finance globally and nationally. Just to mention a few of them, to further put effort on national level collaboration and coordination, to work on definitions of green finance, but more importantly, a taxonomy on inclusive green finance, detailed vulnerability assessments in order to be able to shape policies and tailor interventions, advancing digital financial services, and the importance of incentivizing the FSPs for greener projects and products, awareness raising amongst different populations, and advancing financial education in different areas, a promotion of new technologies through lending facilities, having a specific focus on women and their vulnerability to the impact of climate change, but also international coordination and better coordination between international organizations on inclusive green finance. But also the new recommendations of elevating inclusive green finance to standard setting bodies. Also the importance of global solidarity and collaboration, especially around the most vulnerable nations, and making sure that no one is left behind and that everyone is heard in the global development of green finance. I want to thank you for the last hours, but also for your active work in the past years. From the AFI Management Unit side, we do indeed look forward to working together to advance and develop inclusive green finance, to reach more and enable and empower those that are the most vulnerable, to build resilience and enable mitigation of environmental degradation and climate change. With this, it's a great honor to close the 3rd annual Inclusive Green Finance Conference, and I very much look forward to continuing this joint journey together with all of you. Thank you. And I also want to encourage you all to fill in the evaluation form. We'll also share this with you in an email following tomorrow. Thank you so much for your active participation today, and really look forward to staying in touch with all of you around inclusive green finance. Stay safe and take care.